Hello, everyone. I'm here today with Serunjogi, co founder and CEO of Pan African consumer fintech Chipper Cash. Thanks for being here, Ham.
Thank you for having me, Emeka. It's good to be with you today.
My pleasure. Now, of course, I want to talk to you about the new product, Chipper ID. But while I have you here, there's a lot that the audience can learn from you. And I'll just run through very quickly some Chipper Cash highlights, right? So, you all, since 2018, you guys have raised over $300 million. dollars. You have 5 million or so registered users, reportedly generated over $100 million in revenue last year. You've acquired or are in the process of acquiring a Zambian company, Zoona. You operated in multiple countries in many of Africa's largest fintech markets. You've built one of the few African companies to reach unicorn status, but you've experienced a valuation cut that made headlines very publicly. Chipper Cash was also among the few companies directly affected by the FTX collapse, and you've gone through a few rounds of layoffs, right? So you certainly have the experience in terms of highs and lows to talk knowledgeably about building valuable tech companies in Africa, right? So let's just start with the current environment.
Mhm.
It's not an easy time to be a founder anywhere in the world, and especially in African markets, right? So consumers are suffering, businesses are suffering, and for VC-backed founders specifically, there's been a bit of whiplash, from growth at all costs to kind of profitable, efficient growth. So the question I have for you is just generally, how are you coping? How are you managing that transition as a mature VC-backed company from
Mhm.
growth to efficient growth plus profitability?
Absolutely, and thanks for having me again on the podcast today. I think what is important to understand is that at a macro level, right? What's happening in the economy today is cyclical. It happens every 10 or so years, right? We go through periods of boom and high growth and low interest rates and lots of capital. And then you go through periods of you know less capital. Prices go down, asset prices fall, interest rates go up, capital is expensive, and so forth. Right. So this is cyclical. It's happened before. It's what's sort of I think different is that it's maybe happening this time after a bit of a longer period of a very very boom and very strong growth period. And I think what's also interesting is, it's sort of required many companies like ourselves to adjust and be more nimble and responsive to that environment. I think for us as a company, like many other companies, what we've done is to essentially be incredibly tight with how we are using our resources, right? That means thinking about our business just from a perspective of just doing what's capital intensive, which usually is very high growth, high expansion, getting into multiple countries, launching multiple products, getting licenses, hiring a lot of people. Well, those are very expensive things to do. And when capital is less freely moving in the economy and it's more expensive to get, you then want to be very very frugal and think about your allocation incredibly deeply. And I think that's actually a good thing, by the way. I don't think it's an entirely bad thing. And I think for us, the company, we've looked at it as an opportunity to become incredibly efficient. And you've talked about, the layoffs, for example. That was a very painful process to go through because you work with people very closely, you become friends with them, you respect them, you admire them, and then you have to let them go, and that's very tough. But the silver lining of it all is that it actually makes the whole organization that much more efficient because you're now leaner, you can execute faster, you can actually become a more productive organization as a whole. And so across the board, it's reinforced a very strong mindset of every single resource has to be used efficiently. Capital, time, human capital, everything around the company, we have to think about doubly and triply how much we're maximizing it. And that's a very powerful state and muscle for any company to build. So I actually feel much, much better about us as a company today coming out of a process where we've had to rethink our entire resource allocation strategy now than before, because we're that much more efficient going forward. And everything else that we do from this point onwards is being done with a level of efficiency and an ability to execute with our resources in the most efficient way. Part of the stuff that you see us launching today is a reflection of us having this mindset, right? Chipper ID, although it's been an 18-month process to build it out, really was accelerated by us thinking about where are the really big cost centers in the business today and where can we be more efficient. And one of our big cost centers was we were paying a ton of money to all these very expensive vendors and third party services to handle compliance services. And they were giving us, at best, subpar results because, to no fault of theirs, many of these services are built for the Western world. And now you need to use them in Africa, where we have our own unique set of challenges, right? An example I can give you is you think of something like onboarding, where someone puts in a phone number, gets an OTP to sign up. And in the US and most of the Western world, that's not a problem. You get your OTP right away. But if you're onboarding a user in Uganda or in Nigeria or wherever in sub-Saharan Africa, you actually have an issue with text deliverability rates, which means more than half your OTPs don't get delivered, right? And now that becomes a problem with onboarding, and you're losing half your funnel at the very top. And so you sort of think about your onboarding, your compliance, your user verification, all those things much more deeply and much more uniquely for your situation. And it forces you to build those things out for yourself. So we've built out services and we've patented many of them, such as our USSD verification service that we've patented and got a patent for, to solve these challenges uniquely. And on the compliance front, we've built a number of really, really powerful services and tools that we use internally that work very well for us, and that we've been able to leverage. And as they've saved us a ton of money, like millions of dollars they've saved us in costs, we've actually gotten to a point where we say, hey, we can actually offer this as a product to other businesses in our space because I know they'll want to have the same capabilities, they want to have the same savings. And so Chipper ID is a result of that. So, you take what's originally a cost center, bring it down in cost, and then flip it to a profit center. But it's a function of thinking about every aspect of your business. Where can you be more efficient? Where can you cut cost? Where can you be better? And I think that's a very, very powerful state for every business to have. So, as much as it's been a challenging period to adjust from that period of very high growth and very high spend to a period of efficiency, profitability, etc., it's made us and many other companies that much more efficient, and I think we're better off for it.
No, that's a great perspective, right? And you said a lot there that I want to come back to for sure. I think just my personal opinion is the chipper ID strategy is just very smart, very savvy, very shrewd, and I want to dig into that a bit more a bit later. But you also kind of talked about the company taking this opportunity to kind of effectively build certain muscles, right? And I want to, kind of dive a bit deeper there in terms of company building, in terms of, the leadership it takes to become, to steer the ship more efficiently. And there's a quote that I love that kind of says one of the fundamental aspects of leadership is the ability to instill confidence in others when you yourself are feeling insecure, right? And I won't presume to know how you're feeling specifically, but certainly in the ecosystem right now, these are insecure times, right? So, and within the context of Chipper Cash specifically, as you talked about, there's been, kind of a few rounds of layoffs. Layoffs more broadly are more common in the industry. So, just how do you keep your team motivated and focused in this kind of environment? Right. So what are, if you think about other founders that are, pre-seed, just starting out, what kind of advice, what lessons have you learned that might be applicable for them?
Absolutely, and these are things that you don't learn this in school, right? You sort of have to I guess rise to the challenge as you go through these periods. And I think to your point, right, being able to continue to drive um, confidence and excitement about what the company is doing, because you're solving problems that are very hard. You need people to be more than just happy to be around. They have to be excited to be around and work with these problems and give their best efforts to solve them. And it comes down to many things, but I think in a big way, it comes down to communication. And that's one of the lessons that you learn along the way in any scenario: how well you communicate to your team, when you communicate different messages. And I think at its most basic level, it's about understanding that any any journey that's worthwhile, or any endeavor that's attempting to do something daunting or challenging or meaningful, is going to ebb and flow, right? It's never always smooth sailing or up and up and up. There's always going to be times where it's tough and there's lows, and then you come out of them and you have other lows as well. So at a high level, having that mindset of, we're in this journey for many years. This is a multi-decade journey that we're embarking on. It's going to ebb and flow. That mindset at the very beginning is just an important one to instill in the company, and it goes back to also who you recruit, right? Finding the right talent is a very important thing that makes and breaks companies. And so when you're recruiting, you want to recruit people who are subscribing to the idea that I'm getting on this journey and it's a marathon, it's not a sprint. I know it's going to be a long term effort. I know we're going to have tough times. But those tough times are often when people do their best work. And part of it is because it forces you to think about things from a sort of a resource constraint perspective. And you know how they say necessity is the mother of innovation. It actually makes you that much more efficient, that much more capable. And in many ways, I think most companies are actually most vulnerable when they're on a high, right? That's when you become complacent. That's when you attract the wrong type of talent. That's when you sort of, things get too easy that you sort of forget the scrappiness that got you to that point. And then most companies are at their most deadly and most capable when they're going through a tough time, because now everyone is thinking about things from a very proactive standpoint. It's all hands on deck. And that's how all great companies start, right? When you're a startup, when you're on day one, when you're at your most vulnerable, you're also at your most deadly, because in that moment, it's every day is life or death, right? So the way you think about things is very different from when you have a ton of money and everything is going great and it's smooth sailing. And I think the best companies are the ones that are able to maintain that level of urgency, fire burning, ability to remain scrappy, and feel a sense of, we're not there yet, even when things are going very well, because that keeps you always thinking about, where can I improve. And so the point I'm making here is that having a team and a company that appreciates that at a high level, and that knows that today it's going to be this macroeconomic situation where we have very high interest rates, banks are collapsing, capital is hard to come by. Tomorrow it's going to be something else. Before that, it was COVID. No one knew what COVID was going to do, right? If people forget that it was just a few years ago and when we entered the pandemic, and no one's like, wow, the world is shut down, what's going to happen? And that was a huge point of uncertainty for many companies. And so there's always something that comes up that's going to challenge you. The idea is you have to have a mindset and an appreciation of the fact that those things are par for the course. If you signed up for this journey expecting it's only going to be smooth sailing, you're probably in the wrong place and you should leave. If you appreciate the fact that we are going to be tried many times consistently, then you will, in many ways, embrace those tough times in a way that makes you much better to tackle them when they keep coming forward. There's no great company today that hasn't been through an incredibly trying moment. You have your pick of them. They all had very many near-death experiences. And I'm not saying that that's something that a company should look forward to or should want to have. But the point I'm trying to make is that any journey worthwhile is going to have those moments. And I think a high level appreciation of, that's what it takes to do something and make a difference in the world, is very important. Ultimately, that when those times come, you can navigate them as well as possible. And then more specifically, to how I've tried to think about it at Chipper is, Major and I, we try to be incredibly thoughtful about how well are we supporting different teams, and make sure that they have the resources that they need to do the work that they still do. Because at the end of the day, that ability to continue having strong synergy across the company. We have hundreds of employees across the world. make sure that they all still keep communicating and working efficiently with each other. That's something that you always have to keep staying on top of and being as diligent about as possible. But most people understand that these things happen, and if anything, when people see companies navigate tough times, it actually adds a level of excitement and motivation for the teams because they're like, "Wow, we've become that much better. We've navigated this thing. We've solved this thing. We've actually become more efficient." The level of excitement in the company about Chipper ID is very very high, right? And that's a result of us saying, where do we look at areas where we're spending a lot of money and turn them around and have them be as low cost as possible. And so the point here is that in very many ways, these tough times actually build the bonds with teams much more. And you come out of it and you're a closer knit team, stronger bonds. You've sort of built that wartime muscle that will help you navigate the next hump that comes along on the journey.
I love that, Ham. There's that saying that the strongest steel is forged in the hottest fire, right? So it definitely, it definitely resonates. And one thing you talked about is kind of
Absolutely.
the ebbs and the flows of the journey, right? So, and one specific example that came out, I think, in that recent Forbes article, 2 3 weeks ago, I forget when it came out recently, was that caught my eye specifically. Maybe a lot of people didn't catch it, but relative to kind of company building and culture building was the you replaced one of your company values, lead with empathy, with I think be customer obsessed. All right. So to me, I think this is something that a lot of people gloss over, as opposed to more of the the
So
juicier bits
we
in that article.
we
But I
replaced
wanted
about
to,
what? Sorry,
no, I was saying that you replaced.
I missed.
No problem. In that Forbes article that came out a few weeks ago, it talked about how you replaced one of the company values, lead with empathy, with the value, be customer
Yes,
obsessed. Right. And I
yes,
just wanted to get your perspective there. Do companies'
absolutely. Yeah.
values really matter? And can you talk to me about this change? How do you see company values and the role of leadership in bringing them alive? Why was this an important change to make?
Yeah. And this goes back very strongly to two things I mentioned, right? Communication and hiring and recruiting, right? How well you communicate values, missions, visions, and how well the people you're recruiting subscribe to those things and interpret them. And to give you some context, that value that we had for lead with empathy was a value that we put in place to protect the customer. And the reason why is because we recognized very early on that we're going to be building products for Africa, but we're going to be doing so with a global team, meaning we'll have someone in Europe, someone in Asia, someone in the US, someone in Africa, of course, and then all over the place. And so, how do you have an engineer that's based in Eastern Europe, right, building an app that's being used by a Ugandan when he sees something or behavior that he's never seen before? How do you have him interpret that in a way that doesn't just scream, "Oh, that's a bad action. Let me avoid it," versus, "Oh, let me learn what that user actually needs, and let me actually maybe optimize for that." Right? Empathy is what gets you to do that. It's when you see something that you don't know or don't recognize, and instead of assuming it's bad, you actually lean in more and say, "Well, let me look at it from that perspective and see what they're trying to achieve." So that value was intended to protect the diversity of our global teams from unconscious bias when building for an African audience. But what it ended up morphing into was essentially what I sort of termed as a substitute for accountability amongst ourselves, whereby if someone made a mistake, which mistakes do happen, sometimes the first response would be, "Oh, have empathy," before you sort of criticize them or call them out. When actually it should be, no, people need to understand that we all have accountability at every level, and the stakes are very high, and we should lean into that accountability, and that empathy in its own case, as far as Chipper goes, isn't just to remove ourselves from that accountability, but rather to protect our customers from our own unconscious bias. And when we dug deep into that, we sort of thought, well, how many companies do you that have values like be kind or love one another, or these are things that are almost expected, right? You don't really have values for things that we inherently expect you to be. I expect you to be kind to one another. I expect you to be respectful to one another. I expect you to be loving to each other. I expect you to be empathetic with each other. These are expected things. They should not be particularly called out values. And so we change that value to get directly to what it's intended to do, which is protect and focus on the customer. And that's why it became be customer obsessed. And by the way, this was actually brought up by one of our long-term employees who's been with us for a very long time. She championed this new value. She came up and said, "Hey guys, I want to add this as a value because I think every team can be better if, as they make their decisions, they ask themselves, how does this affect our customer? Is this good or bad for the customer?" And use that as an orientation point to make decisions. So it actually came, the value was very much championed by one of our long term employees, and she pushed it strongly within the company. And adopting it and making it a company wide value was something that Majid and I were very excited to do because it aligned very strongly with why we had empathy in the first place. That's a value, excuse me. But I think more importantly, it goes back to the point of, I think when you think about what I mentioned earlier on, companies I think are their most vulnerable when things are going very well. And one of the ways they're vulnerable in those states is that you start to attract everyone. And maybe you shouldn't be attracting some of the people you're attracting because they come expecting certain levels of maybe even work life balance or experience from what is still a very young and growing company. We cannot give you, Chipper cannot give you the stability and work life balance that maybe Microsoft or Facebook or Google can. Those are mature, entrenched, very, 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 very well performing businesses. Like they can offer those things in very, very powerful ways. And if even Google, if you go back to Google when it was just starting out, it couldn't give you what it gives you today, right? In its very early stages, it required a certain amount of commitment, sacrifice, ability to really, really lean into what the company needs before it achieved its ultimate steady state that it's in today. And I think a lot of startups, Chipper being one of them, that were very successful in raising a lot of capital and growing very fast, I think got to a stage where expectations from employees and people that we attracted were that I can come from Google and Facebook and still get the same level of stability, the same level of parks and benefits and all these things. And in some ways lost that scrappiness, that need to still be in tune with the fact that we have to be incredibly committed to working very hard and bending backwards for the company because it's still a growing company. It's still a baby that needs to be supported very heavily until it's able to be in a steady state that it stands on its own and can then turn around and take care of everyone incredibly well. And so um, all those things manifesting into how we communicated values to early employees and new employees, what those values were interpreted to mean, and what I think ultimately the company needed from its employee base led us to remove that value and have it be more directly descriptive of what its intent is supposed to be, which is focus on the customer. That ultimately is the most important thing we can all do, and embrace this idea that we all need to be highly accountable to each other. And then the mistakes that we make have high repercussions for the business, for our customers, for other stakeholders that rely on us doing a good job. So I'm very happy that we changed that value. I think every young company and every growing company and even more mature startups like Chipper still need to lean into the fact that being scrappy, being able to work hard and be in a hardcore mode, that's a competitive advantage. Like that's what makes you able to navigate tough times, to navigate highly competitive spaces that we're in, fast moving marketplaces. Those things require you to be incredibly tuned in and able to bend backwards and do what you need to do for the company to be as successful as it's been.
That's great. I think you talked about a big A there, the A of accountability, and I kind of just want to use that segue to talk about some Z's, right? The Z's of Zepz and Zoona, right? So the different sides of acquisitions, right? So just I guess very quickly, what's happening with the Zoona acquisition? You announced it at the or at least it went public at the end of last year, but it seems like it was pending some
Yeah.
regulatory approvals potentially. Is that closed or is it still in progress?
Yes. Yeah, I'm very happy to announce that we closed that acquisition. We got our final regulatory approval. We worked very closely, and massive thanks to the regulators in Zambia and the other countries that we worked with. Those processes take many, many months from when you announce intent to acquire to actually closing out all regulatory processes. It's a very thorough process. It's incredibly detailed, so it takes time. But we were able to go through the process successfully. We closed that acquisition. We've integrated the teams. The founder and CEO of Zona is now the chief product officer at Chipper. And we're really doubling down on that company, really boosting our Chipper for Business suite of products and starting to really cater and provide services to businesses in a very strong way. I'm excited about our offering on that front. Chipper ID is the latest addition to that suite of products, Chipper for Business. But really, the acquisition of Zona is to really put that into high gear and leverage our immense infrastructure that's both deep and broad in terms of deep is integrations to multiple banks, telcos, etc., and broad in multiple markets to leverage that and give that and offer that to other organizations who need to do collections, disbursements, whatnot across the continent. So that chip of business angle is what I'm super excited about, and the acquisition of Zona is really to put that in high gear and double down on that effort.
Fantastic. I'm coming right to that next. But just before that, can you talk? What can you share about what really happened with kind of Zepz, right? So a couple months ago, it came out that you guys
Yeah.
were approached for acquisition. The news came out a couple weeks ago. So just what can you share?
So what I can share is that obviously that was leaked, right? I'm very sensitive about confidential process being leaked. So I only had to respond to the part that was essentially responding to what's been said about it publicly. But that was a leaked interaction that we had with them that someone involved, I think, thought they could, go and, get some brownie points from the media and leak, and it happens. But what I can say about that is that it's actually it's very common, and even for us as Chipper, since we started the company, we've always had people come out and reach out to us for to discuss acquisitions, M&As, and so that's been a constant aspect of our business that we've engaged people on. We've never gone out and said, "Hey, come and acquire us," but we've constantly had people come out and say, "Would you be open to discussing an acquisition?" And our corp dev team engages many people on that front. Some of them to varying degrees, depending on if we think that there might be something interesting to learn or build a relationship with on that front. Zepz was one of those that we engaged further than others. I really like the team at Wild Rabbit. Ismail, the founder, someone I admire and I think has been one of the early pioneers of building a great business in Africa. Um, uh, there are many synergies I thought even on a partnership level we could explore. So we engaged that thread more than we've engaged others. But even today, there's people who still come and reach out and say, "Hey, we're looking at Africa as a space that we want to participate in, and Chipper is one of the largest consumer businesses in Africa. So either we partner with you guys, or we discuss an acquisition, or something along those lines." So it's pretty common. If you talk to any other, fintech founder, if you talk to GB or Shola, anyone, Shola was, Paystack was acquired already, but they'll tell you that it's very common for people to reach out to discuss acquisitions. So that in its own right isn't new. I think what is new is that someone who was either involved in that process or heard about it thought it would make for good news and they leaked it. And unfortunately, that's part of our business and our industry. People leak stuff, and you just have to, you know, roll with it and keep moving forward. But yeah, in terms of us having engagements with people that want to discuss acquisitions of Chipper, that's a constant thing. It always happens, and it's not unique to us. I mean, any company that's doing anything interesting, there's always someone else out there who's thinking, how do I work with these people? How do I acquire them? How do I partner with them? Or something along those lines. So and I know I might sound like I'm being ambiguous about the Zepz thing in particular, but that's because we actually had it's a confidential process that we both parties engaged to and agreed to be confidential about. So I don't want to break that confidentiality. I'm only responding to what was leaked about it to say that yes, we engage them, and we engage many people who come out to us. But Major and I we still think that there's a lot of value to be built with the current strategy we're on as an independent business. But my view and my thoughts have never been that I say no to discussions with people about ideas they have. Ultimately, our objective is to build great financial services for people living in Africa, to return value to our shareholders. And if that takes the form of being acquired by a larger company and working with them and doing and pursuing that angle, then we'll do that. Right now, we don't think it does, so we're not doing it. But we always engage people who come and see what they have to say, and in almost every case, we either leave with a very strong connection that we've made, or we partner with them on some front. We do something together in some avenue, or something else comes out of it. So we will always continue to engage people who want to discuss acquisitions with us, and that's not going to stop. I'll always that's a very potential exit strategy for Chipper, which if we do get acquired and it's something that returns value to everyone, that'd be exciting, and I'll be the first to come out and say, hey, we have news to announce. If we go on IPO, which also is a very viable path for us, that's also exciting. So to me, I'm 100% open to whatever outcome makes sense for the business.
Yeah, you should. You can make that announcement with Afri Digest. But I think that's great context for the audience. Right. So now let's talk a bit more about the business. All right. So you talked. I mean, I think I introduced. Well, I'll say it first. I think most people, if you say what is Chipper Cash, most people will tell you it's a cross-border payments business. And at the start of this call, I introduced Chipper Cash as a Pan African consumer fintech. But as you just mentioned, right, the Chipper for Business
No.
is an increasingly large part of the business. That Chipper ID product is not a B2C product. So just from you, how do you think about the business today? How do you describe Chipper Cash?
Yeah, I that's a great question. We've definitely grown significantly from when we're just a cross-border payments app. That's what we did first, so that kind of is what people have always known us by. But I describe Chip as we're a platform um, where Africans can live their financial lives and unlock value for them in the different aspects of their financial needs, and that could be in the form of sending money across borders. It could be in the form of investing in an asset. In Uganda, we're the only company licensed by the central bank to offer and by the uh, Capital Markets Authority to offer US fractional stocks. So Ugandans can use Chipper to buy stocks in 6,000 publicly traded US companies, Tesla, Amazon, whatnot, and buy them for as little as $1. So fractional stocks, low entry point. In Nigeria, we also have that product. So people can use us to buy assets and invest and save their money. They can use us to buy crypto. They can use us to use our Visa card to spend money online. As you know, one of the challenges about interacting with the online economy in Africa is that people have the intent and they have the money to buy things online. They just don't have the way to do it, right? It's still a challenge. Mobile money doesn't work online. Most banks, the cards they give you for just ATM use, at best they only work on local websites and work on international websites. So our Visa card has been a hit because a lot of people that's their sole way to interact with the online economy, to buy things online, pay for goods and services online, and that product has grown incredibly well. We've issued over 600,000 cards already. We're the largest issuer of virtual cards in Africa, and that's growing very fast. And then now we have the chip of a business side, right? We started a company focused on consumers, and that's still a big part of our business. But ultimately, if you're going to participate in fintech in Africa in a strong way, businesses are part of that, right? The same challenges that consumers face with moving money are the same challenges that businesses face. And as you know, Africa's economy is predominantly small and medium sized businesses. So if you can solve and enable those businesses to collect payments easily, to make payments easily, to move money easily, you can really tackle a big problem and create a lot of value. So chip of business is super exciting. As our user base grows, over 5 billion fully verified and registered users. Businesses want to interact with those people. They want to access those consumers. So the chip of business angle becomes incredibly exciting because of that of that growth in the consumer business. So it's definitely, I mean, from when we started in 2019 to where we are now, it's a very big platform. And what's interesting and exciting about the way we've built other platform is that as it grows, we start to unlock value in other areas. Right? I think chip of ID is powerful not just because it takes a cost and turns into a profit for us. It's also powerful because it represents our ability to take tools that work for our business and given our scale that we know can support massive scale and offer them to others. And that chip of ID won't be the last time we do that. There's other areas in our business where we know that we've created tools and products that work very well for us that others will pay money to use. So as we keep growing and getting bigger, we start to tackle and move value in other areas that I think are going to be exciting for the whole ecosystem. So, definitely the need to be both vertical and horizontal, although initially was a painful thing because it was hard and expensive. As we've grown and scaled, it's actually become a value unlock for us as a business because we're now able to take those extra bits of infrastructure that we've built and offer them as a service. So yeah, to answer your original question, we've come definitely a long way from being just a cross-border payments platform to being almost your one-stop shop for financial needs and services across Africa, and then also for businesses as we keep scaling the business suite.
No, that's it's a great overview. Now, I think just again for the audience, even for me, but for
Oh,
the audience,
where are you based?
I'm in Lagos, Nigeria.
Oh, do you use our chipper card?
I don't use the card, but I what I do use is the integration with the peer, right, to make some payments with
Ah, okay.
yeah with some other services.
Use the
But
card.
I'm
Trust me, you'll
also
love it.
like I also have like a U.S. card directly, right? So I'm not the ideal
Okay, yeah. So
case.
you're
Yeah,
one of the few who was that. Yes,
exactly.
yes. But just for purposes of seeing how the card works, I'd highly advise recommend that you try it out, and let me know. You have my email. Let me know if there's things
No,
about the product that you want us
I
to
don't want
improve. But
special
I
treatment.
have a
I
feeling you'll
want
love it.
the same experience any other user would get, right?
That's you'll get it.
But I wanted to talk to you about what you said, right? You talk about the virtual cards. You talk about the money transfer, stock trading, bill payments, and the new chipper ID, etc. But I'm curious, to what degree is this kind of product suite, the to what degree are you following the original product plan versus kind of responding to opportunities that present themselves?
I'm glad you asked that. Major and I, since day one, we've always had this vision. Our ambition wasn't just to do one product, one cross-border payment. That was our entry into the space. But we always, from day one, we always wanted to do all the products that we're doing today because we knew that. And if you think about it carefully, every single product we have complements the next product, right? If you look at it as an ecosystem, right? Sending and receiving money was the first part, but now that you have your money moving in the system, you can do something else with it. You can actually take it and buy a stock online via our product. You can take it and buy crypto. You can use it on your card and spend that money online. So all the products are integrated so tightly that they each drive extra value for themselves. If you take them all apart, you take our P2P business, our cards business, our stocks business, our crypto business, they can all individually live on their own separately. But they become that much more powerful when they live together. And so that was always by design, right? We've always been building out those products intentionally from the very beginning. We just couldn't start out with everything at the same time. That was too hard and too expensive. And to be frank, many investors, that's too scary when you have such broad an ambition, right? They want you to focus on one thing and do it well. And so we always wanted to have P2P as our entry point, but our ambitions were always much broader than that. So this is what we've always wanted to do. And then there's also an aspect of it, to your point, that you said is responsive, right? What the most important thing any business can do is listen to their customers, right? And say, what are they asking for? What do they want? And we're no different. One of the products which has been requested for so much and will be launching soon is our US deposits product. So we'll be issuing essentially full-fledged USD accounts to all of our users because people have been wanting to receive dollars from across the world very easily. And so that's an example of a product where we listen to the customer and say, what else do you want? Um, Shipper ID, I already talked about how that came into existence. So that's been more a function of us saying, wait a minute, we have far and beyond the best tech suite for compliance in the space. People will pay for this. It'll save them money, and it's better than what's available in the market right now. So that, in many ways, that's how that came out of it. But the core platform, the core consumer platform, and the high level chamber for business product suite, we've always had a plan to build that out. And I think that's one thing that has always set us apart as a business. Major and I have always thought about Chipper and the platform as it's a global platform that's serving Africans and people who live in Africa. And to do that, ultimately, you're going to have to do more than just cross-border payments. You have to figure out how people save and invest their money, where they spend it online, what are the assets they want to save it in, how the businesses that they use in their lives interact with with those assets and with that money. So we've always had that global mindset and ambition about the business, and we've built and executed on that from day one. Each of these products is very hard to build on their own, as I'm sure you know. So it took like a very deliberate and intentional focus to get us to this point. I'm not aware of any other platform or company in Africa that has the breadth of products that we have on one platform. And that's because we made a very conscious decision in the very beginning to build out this entire product and this suite of services the way we did.
No, that's it's fair. Certainly not that many at that scale. Certainly, um, but I mean, you talked about kind of chipper ID and kind of building these tools internally and being able to understanding that the market would pay for it because you guys are paying millions for in your perspective a worse performing product, right? So I'm curious about
Yeah.
that. To just what are the mechanics that actually happen when you're building a product like this, right? You're paying millions of dollars to identity verification providers, and at the same time, you're building your own product, right? Do you
Yeah.
know, from day one when you start building that you're going to compete with them? Are you talking with them? Is it a
No.
secret? Is it, how does
And
that?
to be frank,
What are the mechanics of that?
yeah, to be honest, we never set out in the beginning to build chipper ID, right? It starts by you first start by filling out the gaps that exist, right? You go and you onboard a vendor on Fido, Smile ID, whoever, and you soon realize that the product as it is does not meet all your needs. There's a gap here, there's a gap there, there's a gap there. So you start to build out those gaps yourself, right? Whether it's some documents don't get verified well, so how do you fix that? Some people get lost in onboarding, how do you fix that? Some ID types don't work with the vendor that we pay. How do you fix that? Many times that involved us actually, we had lend technical support to some of our vendors to help them build out their infrastructure to support our needs. And so it starts small by you just plugging the holes that your business needs because the vendor's solution it's not custom made for you. It's sort of uh, it's a uniform product that they make for everyone to find value on, as opposed to a tailor-made product that fits your needs exactly. So it starts like that, and like as mentioned, because of how much we've grown on our scale, our needs become even that much more higher. We start to, the edge cases become that much bigger. And so you start to invest even more and more to fix all those pieces. And then what you end up with is essentially you've rebuilt the entire product, because what you need is vastly different from what you're getting. And either you live with a subpar product, which is very expensive and costly because you're paying money for it, and at our scale, if if even let's say 25% of users are being affected, those are millions of people, right? So you can't just say, "Oh, I'm going to ignore those people." You have to fix for that. And so you eventually end up with something that works so well for you. And because you've grown so big, it actually supports massive volumes. And then you start to pull back a little bit and say, okay, now we have this service that works well for us. We don't need that anymore. So then you turn that off and you start to really use your own service. And you do that enough times, like we did, you end up with that entire suite. And we went even further. We have very good ML and AI teams at Chipper, where we added extra levels of sophistication to our products that tackle things like fraud, and because we have massive amounts of data, we can leverage massive data sets to build out much better products that are better trained, are trained on much larger data sets, and can leverage our AI and ML tools in a much stronger way. And so a combination of those things creates what ultimately is a near perfect solution for, in this case, identity verification. And soon enough, you start to see yourself come from a place where you're spending, so many millions on a bunch of different vendors, to you've saved so many millions, and then it becomes even more obvious that X, Y, Z other people in the marketplace also want to use your product. So then you, like we did, offer that as a service. And the other thing that's very important to understand is that uh, because of how we are positioned as a consumer of Chipper ID ourselves, right, we build it from the ground up to be as minimal as possible. And what I mean is that only the things that are needed about it are what we build, right? If you're a vendor and your business is to make money off building tools for others to use, your incentive is to generate more revenue from your tools. So you're incentivized to keep adding products and services, some of which might not be needed. Our incentive as the primary consumer of Chip ID initially is to remove cost and waste. So our incentive is to have it be as efficient as possible, right? So we're coming at it from different angles. And because of that, we have a perpetual competitive advantage to offer the most efficient tool that can be offered, as opposed to a bloated tool that is designed to just maximize revenue from the consumer. And that those are things that matter for businesses, because every small level of incremental efficiency adds up big time as you keep scaling. So all those things matter very significantly for businesses. It's sort of, like if you think about today, most startups use AWS, right? But the largest businesses, Facebook, Google, they have their own data centers because their needs are so large and so unique. They can't just go and get an off the shelf solution to work for them. Now, obviously, Facebook doesn't outsource its data centers as a business, but if they wanted, they could, right? That's a whole other point I'm making. But the idea is that we've had to build our own suites of products because our needs have been so unique and have scaled so much. And it's put us in a place where the end result has been having a suite of products that we know is going to work very well for others as well. And we can now offer that as a product.
Yeah, look, I think I said before, I think as a strategic, play, it's very shrewd, right? And I'm curious. You teased this earlier. I don't know if you can share, but you kind of talked about Chipper ID being one of the first of these internal tools that you've built that you're rolling out to the market. Can you share, just
Yes.
I guess generally what other things you're potentially thinking about in that same kind of vein?
We'll have to do another one of these before I can share that. And
Fair,
this is because I don't want to get ahead of myself.
fair
But
enough.
the point I guess I was trying to make is that um, what's interesting about Africa and the space we're in is that you have to be both vertical and horizontal in many areas, right? You have to build your product and you have to build the services that support your product because they probably don't exist. And so if you get big enough, the services you've built to support your product can be used by others. So there's many aspects of around our business where we've done that. This is just the first one that we've publicly announced. But there's many other areas where we're aware that in due course we will be a very strong competitor in that field. So, but we'll have to do another one of these before I can share more about that.
Let's do it. I had to ask. And I think just the last question, and then I'll let you go, is really for our audience, right? So if you think about tech in Africa today, most companies, are pre-seed,
Yeah.
seed, a few Series A. So there are a few companies that are really mature growth stage companies. You're among them. I talked about kind of the experiences you've had at the top of this kind of conversation. So I know a lot of people would be interested in hearing your thoughts. So for folks that are interested in
Mm.
building companies in or for Africa, just what advice would you give them?
Yeah, I would say that one, obviously, like I said at the beginning of this discussion, um, it's a marathon on a sprint. It's a long, arduous, painful journey, but it's highly rewarding. And the reward isn't just so much in the end state; it's in the process. Now people can say easy for you to say that you guys have raised a lot of money, you've all done well, blah blah blah, and that's what everyone's experience, and that is true. But the reward isn't just in I want to make some money. And the way you can really tell that is if it's just about making some money, we'd all be gone, right? Like we've been fortunate enough to already make enough money along the way with Chipper that we're very comfortable and very happy. But that's not what we started this for, right? We're in it for a bigger purpose, and the bigger purpose is seeing the impact that you can have on the lives of people living in Africa, in this case, or wherever you're trying to solve a problem for. And that is a uniquely rewarding thing that is worth giving your best energies, your best efforts, and staying at it for a long time. It nothing worthwhile gets solved overnight. So I would say strap yourself in and be okay with the fact that it's going to take a long time, and that's fine. Give yourself the time, make mistakes, learn from those mistakes, and then the other thing I would say is that it's okay if you're the only person in the world who sees the value of what you're building. Entrepreneurship is a very lonely journey. Um, uh, I've had the hardest time raising money for Chipper. In the beginning, no one gave us any time of day. I got laughed out of many rooms. People didn't take me seriously. No one really saw the value of what we're doing, and that can take a toll. It took a toll on me. That stuff was very hard. And those are the areas where I really leaned on my co-founder Majid, and he was like, "Dude, we know what we're doing. We'll just keep building, just keep moving forward." And that refusal to give up and that refusal to be let down by other people's inability to see what you're building is very powerful. It's almost like a shield. And I tell every founder, like, have that shield and keep it close to you. It's 100% okay if literally if you could be the only one in the world who sees the value of what you're doing. That's all you need. Like, stay at it. Don't let other people's opinions or thoughts or those things distract you, because there'll be a lot of those. Everyone has an opinion about what you're doing. Everyone will talk about it. Everyone will say and be very quick to point out where you've made a mistake. That's just noise. Like, there's a lot of that noise that will always be there. Like, just stay laser focused on what you're doing. Um, um, uh, don't worry if only you see the value of what you're building. That's kind of what makes it insightful. That's what makes you the visionary, because you see something that everyone else, the rest of us, don't see. So really lean in on that, and allow yourself the ability to appreciate that it can be a lonely journey, and that's okay. Um, um, don't worry about the fact that some people or many people don't see what you're building. Just have your idea, have whatever team you're working with, and just stay the course with those people. I can't stress that enough. That's I've seen so many highly talented people with great ideas give up too soon because it really gets trying. It's like um, I guess yeah, it's one of those that anyone who's done anything new or daring understands how tough it can be when you're really in the thick of it and you don't see light at the end of the tunnel, but you have to keep going. And that's what entrepreneurship is. That's what startups are. So yeah, I'll just really, really emphasize that embrace that uncomfortableness, that uncertainty, that pain almost that comes with having to you know go against the grain, think differently, do something daring, and even if you fail, you'd have still been successful because you tried, and that in its own right sets you far apart from anyone else who didn't try. So that's what I would say. And we need more people to do more difficult things. There's still so much opportunity around us that has not been tackled. I mean, we've just spent an hour talking about chipper and financial services, but we have education, we have healthcare, we have transportation. Like so many areas around us that we need smart, driven, hardworking people to say, "I'm going to take a stab at this and I'm going to try and solve it." And I try to support as much as I can. Major and I, we both invest in many young companies. Each of us have invested over $1 million of our own personal money in startups across Africa. Because I think access to capital is going to be one of those things that ultimately, if we as an industry can solve and help at least make less of a challenge, we're going to see an incredible explosion of value created and people building great businesses.
That's fantastic. Thank you for that. Very inspirational, and I think thank you not only for your time but for that commitment to kind of impact directly via your chipper cash, and then as you mentioned through other investments and other activities for kind of broader impact across the ecosystem. So really enjoyed the conversation with you. I mean, it was great to kind of learn more about chipper ID specifically, but more broadly about kind of what's happening with chipper cash, right? So excited
Yeah.
to kind of see. Like, I think that space is fascinating. The identity space, right? It's
Yeah.
kind of core infrastructure as more people come online. So it's definitely an explosion ahead there, and I think you guys are well poised to kind of ride that wave. So excited to watch the space. And just again, thank you for your time. Really enjoyed the conversation.
No, thank you for having me, and thank you for all the good work you do with Afri Digest. People like yourselves, you guys tell the story of our ecosystem. So you do a critical role, and I'm grateful that you made the time to speak with me, and it was very enjoyable. So, yeah, I look forward to keeping in touch.
Yeah, let's do it, and let's talk soon. I want to break the next piece of chipper news.
All right, sure, sounds good.
Thank you.
Yeah, thank you. Have a good one.